Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, May 13th, 2013, and what a day we're having in the market. Boy, quite interesting. So, thank you so much to everyone for coming by and spending some time with me as far as going over setups in the market and principles of trading. I hope this live stream is helpful to you, and hopefully you'll learn some good things going forward in your trading career. And you'll look back and you'll say, I'm really glad I learned that. So anyway, the format for today is that first of all, we're going to run the U.S. government required disclaimer. And then after that, we're going to take a look at the markets in general and see if we can size that up. And then we're going to take a look at my current positions, where we got in, why we got in, and how we're going to manage the trades going forward. And then we're going to take a look at my stock list, and we're going to go through each one and analyze the technicals and see if there's anything interesting for today. And then after the market closes, I will answer any questions that you have. So if you don't understand something I'm saying, or if you had questions from a previous show, just let me know and I will do my best to answer them. So okay, first of all, let's go ahead and take care of the U.S. government required disclaimer, get that out of the way, and then we'll get to business. Okay, about 40 seconds. Stay with me.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, well, let's get to it. Before we get to my positions, let's look at the market in general. We're having a big down day today with all the drama with the China trade deal that went awry. Currently, the Dow's down 557 points. I believe that's one of the biggest down days of the year. The Nasdaq's down 229 points. It's taking the brunt of it. It's down 2.9%. And the S&P is down 61, which is 2.16%. So very tough day out there. Let's take a look at the charts and see if we can make some sense of what's going on. All right. So the Dow Jones Industrial, you can see we were the 200-day, at least at the current moment, was not able to hold the price was not able to hold the 200-day moving average. It did at one point today get under the 30 RSI. So if this does close back above the 30 RSI on a closing basis, I will go ahead and take a position. If it's under the 200-day, I will take a half position. If it's over the 200-day, I will take a full position. Qs, we just gapped down underneath that 50-day moving average, which is not a good sign. It did not go below the 30 RSI yet, so I will not be buying this because I like to see something close below and then go below 30 and then close back above 30. But right now, this did not go as under 30 RSI. So the SPY. Gap down below the 50-day moving average, has not gone below 30 RSI. So I do not think I will be, I will be buying this end of the day, and we'll get to that in a second. But I think there's a good chance we might go down here and we might test this 200-day moving average. So, okay, that is what's going on with the markets. We have rallied off the low, so let's be thankful for that. And now let's go to my current positions, see why we got in and what we're going to do with them. Okay, I did buy Amgen back on the 9th of May. The reason I bought it is we had a V1 trigger, which means the current day here that I bought went lower than the previous day, but reversed and closed back over, closed above the previous close. Also went below this previous range here and reversed back. It was false breakouts to the downside and reversed back into the old range. My stop is a close below this red line, which is the low of the previous range. So Friday, it just kept us in because it went below and closed back above. Today, barring some kind of miracle, I will be exiting this position. I do want to point out here, I did take a half a position, only a 5% position size, because it is under the 200. And when the price is underneath the 200, it's a bit more precarious. Doesn't mean there's not good trades to be had, but that's just a filter that I use when price is below the 200 and I get a setup. I will only purchase a half position. So looks like at the end of the day, if it closes under this red line, we will get out. Gold. I did buy gold here on Friday when we had the 520 EMA cross. And we also triggered this fractal. Fractal is two lower highs to the right, two lower highs to the, two lower highs to the left, two lower highs to the right. As you can see, it's been a good trade. These lines here are where my phase outs are, but because we gapped up here, I got all of them up here, thankfully. So that was a really good trade. I took a full position on this because this is above the 200-day moving average. So moving forward now, I've got out, I actually hit 4 profit targets today. So I got out of about close to half of my position on this gap up, which is a nice feeling because now you don't have as much heat in your position, and it's easier to let it go up if it keeps moving your way. So what will be my stop on this going forward? Possibly a close below, like tomorrow, a close below today's low. That might be a good place to just go ahead and lock in the shares that I have left. So anyway, this was nice, especially because I didn't have to get out here, here, and here. I got out all the way here and then hit one more profit target here. So it's nice to have some kind of winner on a day like today. Goldman Sachs. I did get into Goldman Sachs on the 9th of May when we had a multitude of signals. We went down below the 50, closed back above 50. We had a V1, which means this low went lower than this. This bar went lower than this low, closed back above. Also tested this previous range down here and reversed. My stop was a close below the 50-day moving average. So today, if it closes down here, I'm just going to have to go out and get out. Go ahead and get out of the position. I did take the trade under the 200-day. So thankfully, I only took a half position. And I'll tell you, you're really grateful on days like today that you did not have too large of positions. You stuck to your rules. So this was a half position because it was under the 200-day. So unless it closes back above that 50-day moving average, I will be exiting and taking the loss on this. MasterCard. I took MasterCard here on the 7th of May. We had the previous bar had a large, big up bar. The next day came down, held halfway of the bar, rejected the 20-day moving average, which I like. That's why I did buy it. My initial stop is a close under the 20-day moving average. You can see it held here. A couple days ago, it really went down, but then held back above. Did get out of 2 profit targets on Friday, which, you've heard me mention this before, but that's why I'm such a fan of profit targets, because not only did I make some money on this move up, I bought right here. Not only did I make money by phasing out 2 profit targets to the upside, now that it's gone down, it's less shares that I had on the downside to lose. So I actually made some money on phasing out up here and on the way down today, which is a bad day, but It was not with the full position because we had already gone up and taken some profit to the upside. So I'm a huge fan of phasing out. I mean, even if you hit one phase out to the upside and it totally reverses on you, the very least you've paid for your commissions. And as I mentioned with gold, as prices move higher and you're phasing out, you have less shares. It's easier for you to hold on to the position as it's going your way, because that's a challenge for a lot of people. It is for me. That's been one of my biggest challenges, is not getting out when I'm supposed to the downside. I do that all the time. But when it starts moving up and you have that open profit, sometimes it's tough to hold on to it. You just I don't want to give it back. I'm just going to take it. Well, taking it is often not the correct move either. You should have patience, open mind, let it move your way. So anyway, if we do close below the 20-day moving average, which is the blue line, I will be exiting this position. Who knows? I mean, we have rallied off the low. If it could close back above, I will be keeping it, but we shall see. If not, we got to get out. All right. Just give me a second here. Okay. Microsoft. I bought Microsoft on Friday when we had this V2. V2 incorporates 3 bars: day 1, day 2, day 3. Day 2 goes lower than day 1. Day 3 closes above day 1's close. So that was a beautiful setup. Also rejected the 20-day moving average. I had a lot of hope for that position, but you can never foresee these news events happening like they did over the weekend. So unfortunately, just did not hit a profit target on this, but this was my entry. So this was this trade hurt, but if it closes under the 20-day moving average, I just have to follow my rules and get out. This was a full position because this is over the 200-day moving average. So we'll close under the 20-day moving average. I will be exiting the position. Nike. I bought Nike here on the 9th when we had a multitude of triggers. Number 1, we had a V1 entry. This bar went lower than the previous day's low, closed back above the previous day's close. That's a V1 entry. We also tested and rejected the 100-day moving average, and we also closed back up into the channel, the third ATR channel. That's this thick line here. Down below it's below the channel, above it is in the channel. Friday we had a nice day. We hit 2 profit targets. Again, I took about 25% of the position off in a profit. So that, this loss that we have today is only on 75%. So I can't say enough good things about phasing out. Psychologically, paying for your commissions, all sorts of stuff. So now, if this my initial stop on here was the 100-day moving average. So which is the red line. The 100-day moving average currently is at 82.48. So if we close above 82.48, I will be keeping the position, even though it went below it intraday. I like to wait and see what the last, as close as I can to the closing price, because I feel like the closing price is the most valid price, gives you the most clarity. So if it does close above 82.48, I will be keeping it. So it's pretty close. We may be able to hang on to this one. SPY. Well, this was a big bummer. As many of you know, I buy the SPY every day at the end of the day, and then I sell it first thing in the morning. Let me show you real quick for people that are just coming to the channel. But since 1993, if you would have bought the SPY on the open in the morning, sold it each day on the close in the afternoon, you would have actually lost 5.2%. But if you would have done the opposite and bought on the close and then immediately sold first thing in the morning, you would have returned 568%. So meaning more than all performance came in after hours trading. So it's pretty amazing, right? So the green line is the buy in the afternoon, sell in the morning. The red line is the buy in the morning, sell in the afternoon. So You can see that since 1993, it has been a very profitable long-term system, but it does have its drawdowns. It does have its periods where it doesn't work very well. And currently, right now, the last week, that's the case for me. But I do this every day. I take a small position size, and I just like the fact that the data shows that over the long run, continuing to do this is profitable and gives you an edge. And that's what's important in trading. You have to have an edge. So, since I've been doing it, I'm definitely profitable in the trade over the month and a half or whatever that I've been doing it. But, recently, this last 7 trading days, had this kind of situation. But going forward, I will continue to do it. You can't just look at a handful of trades and pass judgment. You have to look at the long term. All right. So, I almost bought a double position here, one based upon the buy at the close, sell on the open, and the other this was a beautiful setup where we went below the 50, closed above. We had this V2, day 1, day 2, day 3, day 2 closes below day 1, day 3 closes below closes above the close of day 1, but I did not. You don't want to have too many positions in any one sector or ETF industry. So, on days like today, you have to be thankful for the things that you did right. A lot of people beat themselves up. Oh, why did I do this? Why did I do that? But don't do that to yourself. Concentrate on what you did. I only took a half position size. I didn't get into this other one that I was thinking about. Days like today days like today should be emblazoned in your mind moving forward to never take too large of position sizes. The maximum account heat, the maximum that I will take for my entire account is 60%. So let's say I had a $10,000 trading account and I used 10% position sizes. Any particular stock or ETF, I would buy a 10% position size maximum. If it was under the 200, I would only buy 5. But let's just say, for this example, everything is over the 200 day. I would take 10% position size in any one stock, and I would have or ETF, and I would have a maximum of 6 position sizes. So the maximum I ever have is 60% of my account. Doesn't mean you have to have 6. Just saying the maximum. Yeah, keep that in mind. Don't ever go all in. Don't ever go all in. And the other thing I wanted to mention is that even though you have 6 positions, make sure they're not that correlated. Don't have 5 tech companies or 6 tech companies as your 6 positions, because that's really like just having one position of 6 because they're all in the same industry. All right. UNG. Let me check something real quick. Just give me 1 second. All right, UNG. I did buy UNG here on Friday. The reason I bought it is because we triggered this fractal. The fractal is when you have 2 lower highs to the right, 2 lower highs to the left, 2 lower highs to the right. It also triggered a V2, day 1, day 2, day 3, day 2 went below day 1, day 3 closed above day 1's close, also to trigger the fractal, also closed strongly above the 20-day moving average. You can see I did hit one profit target already today. For about 12% of my position. My trailing stop is going to be right in this range here, probably the 520. They're almost exactly the same. But tomorrow, if it goes down and this does become a losing trade, remember, I did hit my profit target. It more than paid for several commissions. So, at the end of the year, the amount that you paid in commissions might be equivalent to 20% of your entire net profit. So, that's a big swing. If you could do your phasing, pay for your commissions and save 20% of your profit, that really adds up. So like I said, did hit one profit target today. My trailing stop will probably be somewhere below, close below the 20 or the 5-day moving average moving forward. Okay, well, here's another reason to phase out to the upside. I did buy oil back on the 8th of May because we closed below the 200-day. We closed back above it. My trailing stop is a close below the 200-day moving average. You can see I hit 3 profit targets of this gap in the morning. I had them here, here, and here, but I actually hit them all on the gap. So that was fortunate that I got out of all of them at the open. So I did get out of about 20% here and about 50% today up here. So that only leaves me with about 30% of my initial position left. Now, if it closes below the 200-day, I will get out today. But the main thing, I guess, that I want to show you is I am up on this trade, even though this massive reversal. I bought here at 12.89. Now it's down here, and I will be getting out if it closes under the 200-day. But I'm still profitable overall in this trade. Pretty cool, right? So if it closes under the 200-day, I will be getting out. But another good example of why phasing is a good policy, at least for me. Okay, so let's go ahead and run through and see if we have any potential positions that we might find today. Kind of a nasty day to find positions. Volatility has picked up so much, but that doesn't mean that there are not setups based upon the volatility. You just, you have to look for your setups regardless of what the market is doing. Okay, what do we got going here? Give me 1 second. Okay, so the Dow is picking up some steam to the downside. It's down 615 now. Boy, it's going to be interesting close, I can tell you that. All right, let's see if we can find something for today. Apple. So Apple, boy, I apologize. I have to fix a couple things over here. Just give me 1 sec. All right, all taken care of. Whew, all right, so Apple. At some point we got close to the 30 RSI. We did not go below it. Where would I be interested in Apple going forward? Couple places. Tomorrow, if it does intraday go below the 30 RSI and then close back above it, I will take a position, a half position. In the future, if we do close back above the 200-day, I will also consider taking that then as well. But I have to have a close back above the 200. And if it closes above the 200, I will be taking a full position. But if it goes under the 30 RSI, closes back over the 30 RSI, I will be taking a half position. So where it is right now, it needs to move up or down. Engine, we talked about, we have that position. Amazon, boy, Amazon pegged the 50-day moving average almost, it looks like, to the penny. So, am I going to buy Amazon here? Probably not. What I'd really like to see is I'd like to see it close below the 50-day moving average and then close back above the 50-day moving average. That would give me some confirmation that it tested this area, didn't like it, and moved back up. So moving forward, a close below the 50, close back above the 50, I will be buying Amazon. Let's see. Boeing. Oh boy, look at that. You know, they took a lot of the brunt of the China deal, so I will not be interested in Boeing at the very least. A close back above the 30 RSI would be my first trigger for me to get into this trade, and because it's under the 200, it would be a half position, but nothing as is, nothing right now. Alibaba, the 32 RSI. You know, that's a low RSI. You do have the 200-day underneath you. I would like to see a confluence of the price getting to the 200-day at the same time we're at about a 30 RSI. That would be ideal. But we do also have earnings coming up. So, you know, if this closes under the 20-day moving average and then close back, I'm sorry, the 100-day moving average and then close back above, I might consider it normally, but we have earnings. So anyway, there's really nothing I can do with Alibaba because of earnings. Caterpillar. Well, you can see right now the RSI is 2941 right here. A close back above the 30-day moving average, you know, might be a possibility. Let me go ahead and run the numbers real quick for that. All right. And when I say run the numbers, what I do is I take my account balance, I times it by 5%, and then I divide that number by the share price, which is 125.53. This is well under the 200-day moving average. If it does close above the 30, I would consider taking a half position. Now, do I think it's going way back up? No, I don't. I probably would be playing it to somewhere in there. So my profit potential would be this kind of situation. My profit target, or my loss would probably be this kind of area. So this closing above the 30, we'll mark it and we'll see what happens. Well, we're getting close to that. Getting close to the 700 down again. Canopy growth. Boy, nothing there. Nothing as yet. You know, maybe if it gets down here to that 200, it might be interesting. Cisco, 26 RSI. Really nothing we can do there. Boy, that is just nasty. We have earnings coming up also. Diamond. This was earlier today under a 30 RSI. Right now it's a 30.54. So at the close, if this does stay above 30 RSI, I will be purchasing a position in this, but it will be a half position because it's under the 200-day. If it closes back above the 200-day, then I would take a regular 10% position size. But if it closes here under the 200, I will be taking a half percent. I'm sorry, closing over the 30 RSI. But if it closes under the 30 RSI, I will not be taking it at all. Dexcom just moving sidewards. Boy, Etsy, it's a 32, 36 RSI. Same with the others. I'd like to see this go under the 30 RSI, close back above, because there's buyers at the 30 RSI. And if it goes down below 30 RSI and able to rally back up, that shows that those buyers have come in. It shows that it's put in some kind of initial floor, shows that you have some kind of support. But I'd rather watch it go under 30 and over 30 before getting involved. Facebook, it's a 45 RSI. Yeah, I'd like to see this close below the 50 and above the 50. 5 below, boy, look at that, up and all the way back down. So where would I be interested in 5 below? I'd have to have a close below the 50, close back above the 50 moving average. That would be my entry. Swiss franc. had a big day like gold. This is a risk off asset. I wouldn't be buying it here because it thoroughly got rejected by that downward sloping 50-day moving average. And we also have gold. You know, if I bought Swiss franc here, you know, then I'm essentially doubling my gold position in a way, because they're both generally going to go up and down at the same time. It's just like if you bought Apple and Amazon, they're too correlated. GE, yeah, nothing here whatsoever. Gold, we talked about that. I will be keeping my remaining gold position here going forward. Where would my stop be? Probably a close below today's low in the future. Google's at a 33 RSI currently. It did not get under the 30 RSI. If it closes back above the 200-day, I will be taking that trade if it closes above the 200-day, or if it closes under 30 RSI on a closing basis, or even intraday, and then it closes back above. That will also be an area that I would be interested in buying Google. So right now where it's at, it's not high enough or low enough for me to take a look at it. Goldman Sachs, we talked about that. I will be getting out of this at the end of the day. HCA, nothing much going on there. IBB is a 31 RSI over here. It does not look like that it closed below the 30 RSI yet. If it does close below or goes below intraday and then back above, I would consider taking a position. But it would only be a half position at the very least, because, oh, let me move this over here. You can't see the RSI. It would be a half position because I'm under the 200-day moving average. Intel is a 19.66 RSI. Where would I be interested in Intel? It'd have to close back above the 30 RSI, so nothing there. The Russell 2000, just in a lot of trouble. Just in a lot of trouble, like about everything else right now. Let's see where we're at. Oh yeah, it's getting pretty nasty, folks. It is getting pretty nasty. All right. Johnson & Johnson has tested the 200-day a couple times. I would like to see this close below the 200 and then back above the 200 for me to get interested. Well, Coca-Cola is hanging in there. It did hold halfway of the large bar that went up on Friday. You know, this is more of a safety play. Hey, Frederick, how you doing, my friend? Thanks for stopping by. I appreciate it. So no real trigger here. I mean, it is holding the halfway mark of this big bar. It is holding the 50 RSI, but that's about it. Lockheed Martin, we did a couple days ago break out into a new range. Now we're breaking back down into the old range, so this is considered a false breakout. Not a bullish sign, more of a bearish sign, but I don't do a lot of shorting. So, you know, some people would short this, but I don't enjoy shorting most of the time. 3/4 of the time stocks go up, not down. So I'd rather be on the side of the statistics. MasterCard, we talked about that. We have this. If it closes under the 20, we'll be taking a loss on MasterCard. 3M, man, I've never seen a stock go, well, I mean, I have, but not recently, one that has just been such a steady move down. So nothing on 3M. Altria, yeah, I mean, if we close back above the 100-day moving average, I may consider this. We do have a higher low in place here, but as is right now, no. I will mark it just in case it until it closes back above. Merck, nothing got good with Merck. I'd probably be interested in Merck somewhere down here around the 200-day moving average. Microsoft, Definitely going the wrong way, that's for sure. So close under the 20-day moving average today. I will be out of Microsoft. Netflix pegged the 100-day moving average. I'd like to see Netflix test this 200-day and the third ATR channel, and at the same time, ideally, go below 30 RSI and back above 30 RSI. That I would definitely be interested in that kind of setup, but it's not there at the moment. Nike, we have that. If we close underneath this 100-day moving average, which is the red line, I will be getting out of Nike for a very small loss because we did hit 2 profit targets. So who knows? End of the day is not here. If it, there's a possibility it would close above the 100-day, and at that point, I would keep the trade. Philip Morris, nothing really. It has tested the 200-day a couple times. It does have a bullish divergence, which is pretty nice, actually. You see this low, then we rally, we come back, test that low, see the depths of the MACD lines, how deep they are, and then see, even though we got down to the same level, see how narrow these bars are. It's a pretty good setup. Right here at this point, though, I honestly, I'd like to see this test the 200-day moving average, even though we do have this bullish divergence here. Okay, PayPal. PayPal, very weak, very weak. I would imagine this is probably going to test the 50-day moving average at the very least, but nothing for us there. The Qs, my gosh, 30.90, 30.93. If this were to close under the 30 and back over the 30 RSI, I would be interested in that, and that may happen. That may happen. We could get a rally here at the end, or we could go down a lot more at the end. But I'm going to do my numbers. And this is over the 200 days, so I would take a full position. But again, to reiterate, I would have to see this go under the 30 RSI and then back above it in order for me to get interested. Silver not doing much, even though gold was up nicely. It's kind of interesting to see the disconnect there. So nothing there. Oh, just give me 1 second. All right. The SPY, I will be buying that at the end of the day, based upon my overnight, the overnight SPY trade that I showed you the stats before. Currently, we're at 32 RSI. We could have this magnetic attraction to the 200-day. We'll see what happens in the coming days, but I will be buying this at the end of the day. Square, it's under the 30 RSI right now. So I would not be interested in Square. AT&T is also down, did close above the 100-day moving average, and now it is down below, so nothing there. Bonds, big strong day up, but we do have gold, so those are both risk-off assets, so I would not be adding, because it would just be like adding one tech company to another tech company, because they're both risk-off assets. Tesla, well, good example of a nice divergence though. See the bottom, then we rally, see how we've come lower than the previous low, but the depth of this bar is not as deep. It's much more shallow than these bars. So that is a good, this is, in big picture, this is a good setup, but what's the trigger? Well, the trigger for me would have to be either a close back above the previous day's high, or a close below 30 and a close back above. That would be my trigger. So there's two parts. You have the general context of the chart has to look good. You have to have some kind of setup, big picture kind of context. And in this situation, it's the double bottom with the bullish divergence. But then you need a trigger to get you triggered into the trade. That's why they're called triggers, because it triggers you into the trade. Natural gas, we did hit one profit target there. My trailing stop will be the 520 here. United Healthcare is only down 0.78%, so I guess this is a little bit of a safety play. Where would I be interested in purchasing this? Possibly if we took out this top fractal of this range, 2 lower highs to the left, 2 lower highs to the right. It's above 50 RSI. Close above here, I may be interested, but not today. Oil, we talked about oil. I did hit 3 profit targets today, right at the very top, which I'm thankful for. This turned out to be a positive trade, even though in big picture, the trade looks like it's underwater, but it's not. This was a profitable trade. So a close under the 200, I will be getting out of that as well. The dollar index, nothing really there. Visa did bounce at the 50 and tempted to rally. Now it looks like it might be closing under the 50. Verizon, well, it looks like the telecoms are holding their own a little bit more. They're more risk off, conservative. So would I be interested in buying here? Probably not. No, there's really nothing there for me to buy. Energy, well, energy's at a 31.39 RSI. So what does that mean? Well, if it were to go under the 30 and then close back above the 30, I would be possibly interested in buying that, but it did not go under the 30 today. Possibly it closed back above the 200, but sounds like to me it closed under the 30 and it closed back above the 30 would be the best place to enter this. So nothing on that. Consumer staples, we had this big day on Friday. We are holding halfway of the big bar, which is positive. We're also holding the 50 RSI, but so pretty good, but not really something I'm interested in today. You have to be very careful today and only purchase positions that really line up for us. Real estate is down slightly. It is good that it closed below the 50-day and back above, but I'm not interested here. Healthcare also down, so nothing there. And transportations, boy, they really fell off a cliff there, didn't they? So 34 RSI. So you're seeing a lot of these indexes are looking at support at the 30 RSI because buyers come in at the 30 RSI. But in order for me really to get interested, I like to see it go under, then close back above. It just gives me more confirmation. So let's take a look and see if there's anything on Apple. Nope. Again, Apple would have to go under the 30, back over the 30 for me to get interested in this. Just give me a second. Okay, Caterpillar. If this does close back above the 30 RSI, I would consider taking this, but only a half position because we're under the 200-day. Can't remember if this got under 30 or not. Yeah, it did. So if this closes back above the 30 RSI today, I will be taking, let's see. Yeah, right now it's 30.42. So if it does close above this 30.42 number, I will be buying this half position at the end of the day. Google, again, a close back above the 200-day would be my area there. NASDAQ, I do not think it went below, but because of this double bottom with this divergence, if it does go below and closes back above, I would be interested in the IBB. Altria would have to close back above, and the power shares 3108. So again, unless it closes below and back above, I wouldn't be interested. So currently, really, the only thing that looks interesting to me at all is, let me see, Apple. Yeah. Would be Caterpillar if we can close back above the 30, but that's yet to be determined. The Dow, if it closes above 30, I will be buying that a half position. Altria, no. And the Qs would have to go lower. So, okay. So Caterpillar is not there yet. The Dow, if it closes there, would be half position, and the Qs would have to go lower. All right, let's take a look at our current positions and see what we're going to have to do. I have a feeling we're going to have to get out of about everything under the sun. You know, when you have tough weeks like this, you know, like last week we made 1 foot forward, or 1 step forward, 2 steps back, 1 foot forward, 2 steps back. And that's just how it goes. But, you know, keep your wits about you. Don't get frustrated. Don't stab at the market and try to buy a big position thinking, okay, this can't go down farther. It can go down farther. You know, just be happy that you're following your rules, and take some satisfaction from that. So let's all be very careful out there. This is a very brutal market right now. A lot of headline risk. So Amgen closing under the this red line here, which is the low of the previous range. I will be getting out of that. Golds, we will be keeping that because it's going our way. Goldman Sachs close under that 100-day moving average will be, or this red line, excuse me. This was our stop, was the 50. MasterCard, unless it closes back above there, we will be getting out. Microsoft, close under the 20, we will be getting out. Nike, that one's about the only one that we have some hope for. The SPY, will be buying that at the end of the day. UNG, we'll be keeping that. And USO, we will be exiting this because it's closing below the 200. But at least it was a profitable trade. And I'll tell you what, based upon what the market's been, likely any profitable trade is a good profitable trade. So just give me 1 second here.
Order filled.
Okay. Well, we have about 12 minutes left. Take a look here. Hey, Chris Knight. Hi from the UK. How's it going over there? Thanks for coming by, Chris. I appreciate it. Michael says, let's take a look at Teva. So, all right, let's do that. Boy. Well, obviously a lot of sellers came in on Teva. What would I be looking for on Teva here? You know, at the very least, I probably wouldn't be looking for much, but at the very least, a close back above the 30 would be the first action that would get me interested in this. But even if it closes back above a 30, you may be looking for a very short-term bounce. Ideally, for this to go up long term, this has to move sideways for a while. It has to work out all the sellers. You know, it has to work out all the volatility from this big sell-off going sideways. So, you know, going sideways for a while, then maybe having a breakout, or also possibly rallying and then coming back down, testing the previous low with the bullish divergence. That's about the only way I would be interested in Tiva. But yeah, that's pretty nasty. Hope you don't have it, Michael. All right. Okay. All right, so boy, I have a lot of things to move out here towards the end of the day. So gold's going to be fine. Goldman Sachs is definitely going to be out of there. MasterCard is going to be out of there because our stop was the 20-day. Nike is going to be the one on the button. UNG, USO. All right. Boy, look at VIX, folks. Isn't that amazing? The VIX is a function of how expensive puts are in the S&P 500. So puts got very, very expensive lately. That's why the VIX is up and all this volatility. You know, on Google, close back above the 200. That would be good. All right, so I'm going to have to start to kind of phase out of a couple things here. Like I said, you know, the closing price is the most important. It's the most valid, but unfortunately, because of my positions and I trade several accounts, I cannot wait until the very end. Otherwise, I won't get everything done. So let's take a look here. So I'm going to go ahead. I'm going to pull the trigger on Amgen.
Order filled.
All right.
Order partially filled. Order filled.
So Amgen is out of there. Gold, we know we're okay. Goldman Sachs. We have 8 minutes. Microsoft. Nike is definitely going to be end of the day one. UNG is going to be fine. Gold. I'm sorry, oil. Caterpillar is under the 30 RSI. The Dow, I will be buying that at the end of the day if it holds. And the Qs, I will not be buying that because it doesn't look like so. All right. Okay. So I'm going to clean up my charts a little bit. All right, I'm going to go ahead and get rid of Goldman.
Order filled.
Okay.
Order partially filled.
All right.
Order filled.
So Goldman is out of there. All right, I think I'm going to go ahead and get rid of oil.
Order filled.
Okay.
Order filled.
Okay, oil is gone. All right. What do we have? 5 minutes. Okay, I'm going to go ahead and get rid of MasterCard.
Order partially filled.
Okay, and
Order
MasterCard
filled.
over here.
Order partially filled.
All right, MasterCard is
Order filled.
gone. Let's take a look at Microsoft here. The Dow Jones. I'm actually going to go ahead and buy the Dow right now. The half position.
Order partially filled.
And
Order
over
filled.
here.
Order partially filled.
All right.
Order filled.
And let's see where we got filled on that. 253.46. $253.46. Okay, and we bought that because it was under and back over the 30 RSI. Okay, so we have that. We have gold. Microsoft is what we're going to have to be taking off here now.
Order filled.
All right.
Order partially filled.
All right.
Order
So
filled.
Microsoft is off as well. Okay. Buy the SPY. All right, so that leaves us, okay, so we just bought Microsoft, I'm sorry, we just bought diamonds. Gold we have is fine. Hey, Nike is above. We might be able to keep it. Bought the SPY, and UNG looks fine. So was there anything else? I guess there was Caterpillar. If it closes above the 30 RSI, I don't know if that's going to be the case though. Okay, it closes in 1 minute. So I am going to put Caterpillar in there just in case. And over here, Caterpillar. Okay, it would have to close above 70, I mean above 30, but it doesn't look like it's going to be. So what do we have, 15 seconds?
Order cancelled.
Boy, what a day, folks. But, at least we took care of what we were supposed to do, followed all the rules that we're supposed to have. We did close above the 100-day moving average on Nike, which is positive. So, yeah, going forward, we have diamonds that we bought because it went below 30 and back above. Gold we have based upon the crossover. Nike, it did hold the support. The SPY we did buy at the end of the day, and UNG
Order cancelled.
we did hit one profit target. So, boy, what a tough day. But in trading, this is what happens. You do have these tough days, folks, and you just have to get through them. But losing the money sucks for sure. But these tough times, these tough markets really will make you a better trader as long as you can stick to your rules and not do anything you're not supposed to do. I'm sure a lot of people blew up today, you know what I mean, because they probably bought too large of positions on Friday. You never know what's going to happen. Always err on the side of caution. So, I've been doing this for 23 years, and the more you do it, the more you realize that's the most important thing.
Order cancelled.
All right, let's see. Hey, before we get to questions and answers, I just want to let people know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. So if that's of interest to you, you think some one-on-one attention would help with your trading, please let me know. You can send me an email. My email address and my hourly rates are in the description of this video. So, if you feel like that might help, just let me know. And then also, if you found today's video helpful in any way, do me a favor and hit the thumbs up button. I would really appreciate that, and share it and tell some people about it, and let's grow this channel. So, all right, let's see if anybody has any questions. Michael does not have TIVA. Thank goodness, Mike. No, I don't. Berkshire Hathaway holds 43.2 million shares of TIVA. They got hit with the lawsuit. Thanks. Yeah, I would imagine. Hi, Greg. Just wondering how you go about scanning for stocks that fit your criteria. Well, Chris, basically what I just did is how I do it. I have a watch list of a variety of stocks. There's 53 stocks in my watch list you can see right here. And what I do is I go through each one by one, and I look and see if any of my signals are being triggered. And, I have 7 different trading signals or approaches that I look for. Some are when they're going down, some are when they're going up, all sorts of different ones. But I do have a video on my YouTube channel called My 7 Different Trading Setups. And so, if you get some time, watch that. I go through every single type of trade setup that I use. I have a couple examples of each one, but essentially that's what I do. I mean, I go through this chart on this channel, right? During the live stream, I go through each chart and I look for one of those 7 types of setups. So I don't have an automatic scanner. I just don't like that. I like to really look at them in real time myself, instead of just having a scan, because some of the things that I do, I'm not really sure you could scan for exactly. So does that make sense, Chris? Hope so. Oh, and by the way, I did a video this weekend about the importance of using multiple time frames in trading. So I think it was a pretty good video. It's important before you take a trade that you look at time frames both on the current chart, the current time frame that you're looking at entering, but then also looking at the larger time frame. For instance, if you're trading on a daily and you find a good setup on the daily, then also look at the weekly and see if you can find some kind of support, some kind of positive price action on the weekly chart, which is the higher time frame. So just one more time, if you have a good entry, if you find a good entry on like the daily, if you trade off the daily, great. But also look to the weekly chart, the higher chart, to see if you can also find some confirming price action It gives you a little bit more clarity and probably gives you a better chance that you're getting into a good trade. Hi, Frederick. No, I don't. I don't use screeners. I screen myself. I just like to go through each stock in my watch list by myself, look at them in multiple time frames. I don't like something that just kicks out and says, here you go. And these 53 symbols, these different stocks and ETFs, and I get to know them, and it's a broad range, right? I mean, there's all sorts of defensive, tech, consumer staples, so it's a good mix, and so that's what I like to stay focused on. But like I said, I like to go through each one by one, see if I can find one of my setups in those charts. Let's see. Thanks, really helpful. As Frederick asks, how do you decide which stock to put in your watch list? I'll check out the time frame video. Thanks again. Oh, good. Yeah, so that's a good question. That's a good question, Chris. It's important in your watch list to have a variety of industries, right? Have some techs, have some consumer, have some tobacco, have your major market averages, have some gold, have some silver, have some oil, have some bonds, just so you have a nice variety of the majors that are out there. I mean, I don't usually put small stocks in there. I like large cap stocks and large cap indexes just because the bid and ask spread is much more narrow. When you get into the more illiquid stocks and the smaller stocks, the bid ask spread is much higher. But listen, even if you put all the stocks where the Dow 30 into your watch list, that would probably be just fine, because the Dow 30 comprises all the major sectors of business in the market. But I don't like to just have equities in there. I like to have other things, like like our gold trade, right? I mean, thank goodness I had some gold in there because that was about our only profitable one. Well, that and oil, but have a broad mix of things that you can trade. Oh, thank you, Frederick. Thanks, Chris. All right. Does anyone else have any other questions before we go? Before we go, I do want to just mention that it's important that everybody stay safe out there, right? When you have a loss, you want to make it back. You want to make it back as quick as possible, but it's a sure way to lose money when you have a loss and you try to make it back. It's a process, growing wealth is a process. Becoming a profitable trader is a process. It doesn't happen overnight. You have to take your lumps. You have to have the experience. So, in this market, keep that in mind. Please be careful. And if you've taken losses, just let it go. It's part of your tuition. It just happens. The best traders in the world probably take losses 30 to 40 to 50% of the time. So, at some point they take 100 trades, they're probably going to lose 30, 40, or 50 of them. So it's fine. It happens. So let's see. When you say 10% position, is that 10% of 60%? No, that's 10%. So let's just say you have a $10,000 account, Frederick. So let's say you have $10,000 account. 10% of that is $1,000, right? So, let's look here at Spider. Here's gold up on the screen. So let's say you have $10,000 in your total account. So 10% of the 10,000 is 1,000. And that's how much if you were going to buy gold today. And that's the price. So you take 1,000 divided by 122.67. So that means you would buy 8 shares. So it's not 10% of 60, it's 10% of the full account, but then you don't have more than 6 positions or 60% of your 10,000. hope that makes sense. So if you have $10,000, 10% position size is $1,000, but you don't want to have more than 60% of your full position or 6 positions, 6 times 10%. So at the max, if you had $10,000 and you found 6 good entries that were uncorrelated, remember, not 6 tech positions, you would have a total of $6,000 worth of positions. 6 times 1,000, so 6,000 out of your 10,000. But remember, the positions that you take should be uncorrelated if possible. Does that make sense, Frederick? All right. Okay, so, boy, what a day, huh? What a day. 617 down on the Dow, 269 on the S&P. I'm sorry, on the Nasdaq, and 69.53 on the S&P. All right. Okay, everybody. Well, thank you again for coming by. I really appreciate you taking the time out and spending it with us. If you're available tomorrow during the last hour of the market, we will do this again and we'll see what the market brings us. But have a great rest of your day. Go out, do something nice for somebody, give them a smile or a wave or something. It doesn't cost anything, right? And just might make their day, and it'll probably make you feel good too. So, all right, on the way out, I've got to play this the U.S. government required disclaimer. So thanks again, everybody. Take care.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.